From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming January 14th Forex session in the euro dollar. This will be an interesting pair to watch because there are a lot of different things going on. The number one thing that you will have noticed in this pair is the fact that we managed to break over the 133 level. Now 133 had been resistance for some time, as you see, and we actually fell pretty strong from this area, and now we've turned around. This candle here is what changed everything that day, I should probably say. That is the day that Mr. Draghi, the chairman of the ECB, stated that there were no plans whatsoever to adjust monetary policy, in the sense that most people, I believe, were expecting some type of rate cut. And since they're not going to get it, all of a sudden the euro gains. This is more of a short covering rally, or a shock. Everybody has to reprice what they think the fair value of the euro is. Interestingly enough, we closed at the very highs, and it was just short of this 133 level. Well, at that point in time, you can see where there would be concerns. You need to see a daily close above that, because this could have very easily been a shooting star. It wasn't. Now that 133 is cleared, we zoom out a little bit, and we can see that, and I have this line already drawn, 135 makes sense as the next spot to pay attention to. Now, with that being the case, I fully expect to see this pair rise. A little bit of a pullback could happen, but I think 135 is probably a pretty fair prediction going higher because of this. Certainly there's no reason to think that it's time to sell the euro after what we've seen over the last couple days. But what I would bring to your attention that's even more interesting about this chart, and quite frankly, to be honest with you, I can't believe I'm saying this because I can give you 100 reasons not to be involved in Europe. But looking at this chart, you can make a serious case for a complex inverted head and shoulders if we break out over 135. 135 would be the neckline of this massive head and shoulders. Now the question is, what would that mean? Now, classic technical analysis, you simply measure from the lowest point, in this case the highest point in a head and shoulders, to the breakout point, which in this particular case measures, well, we'll subtract, so I'll start with the breakout, using 135 as the breakout and the bottom at 120. Well, that gives you 15 handles. And having said that, that's 1,500 pips. Having said that, if we break out, you add 1,500 pips to the breakout spot. So you add 1,500 pips to this, or 15 handles, you get 150. That's why this is that, to me, is that impressive, because quite frankly I can give you 100 reasons why the euro shouldn't do this, but there's going to be quite a bit of selling pressure at 135. So the real fight, what's truly going to be interesting, isn't what's going on now, it's what's going on above. It'll be very interesting to see how that plays out. As I shift to the weekly, you can go ahead and put a line at 150 and you can see what it looks like. And you can see that going back to there seems like a pretty impossible move, but when you look at this chart, you could in a lot of ways make a case that we're just simply consolidating and we're returning to the top of that big rectangle. Pretty amazing considering how brutal Forex has been over the last couple of years since the financial meltdown back here. You can see that we've essentially gone nowhere since then. So it'll be very interesting to see how this plays out, but I thought I'd bring this to your attention because this could be a very explosive move. We'd be talking probably months, possibly even a year or two before we got up to that general vicinity. Of course, there's also the possibility, let's not get too far ahead of ourselves, that this move never happens. We get to 135, we find tons of resistance and fall back down. But 135 is without a doubt, at least in my opinion, the most important spot on this chart.